Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is a cannabis business podcast. And which should come as no surprise, the latest trends in cannabis company fundraising is bigger deals, new markets coming online. The North American cannabis sector experienced a decline in the frequency and sum of capital raised over the last 5 weeks in 2019 versus the same period last year. At the same time, the average of each deal size increased during the same period. So during the first month of the new year, Viridian tracked capital raises among public and private companies that totaled $686 million versus $820 million. The average deal size is on the rise, jumping from $13 million in 2018 to $24 million in 2019. So while private capital raises year-to-date 2019 have outpaced those in the first 5 weeks of 2018, public raises have lagged behind. The key driver in this year's reduction stems from a decline in funding activity for Canadian licensees and license applicants. In early 2018, these firms were rapidly raising funds to scale and prepare for the national adult use market that was legalized in Canada in late 2018. 420 investors Alan Brockstein said investors should expect to see capital raises shift towards the United States and other regions. He said that most of the capital raises for Canada is done and that many of the operators will see free cash flow moving forward. He added that we may see some issuances of debt in Canada, but the bulk of the equity capital raises is incomplete in his view. We're starting to see investment from outside sectors. Branded products are a cannabis segment that have begun to raise more significant sums of capital. The accumulated capital is going towards brand development in existing markets or to expand operations into new markets. And Viridian's findings and other market discussions have led to some in the space to expect that more of the same is moving forward. Viridian expects to see a continued increase in capital raises in larger sizes, and this trend would be further propelled as the industry develops along with the industry's more mature players. The emergence of larger entities from alcohol and tobacco and other sectors will likely result in additional strategy investments. This year may bring investments from industries like hospitals, food, entertainment, retail, packaging, wellness, and automotive. I just heard that GNC and CVS have agreements to launch their own CBD lines, so I would look at coffee shops and smoothie joints also having CBD products for performance enhancement recovery. New frontiers of legalization may result in similar financing activities, such as the Farm Bill's nationwide legalization of hemp. New products, technologies, and services are constantly being created, and these businesses will need to be capitalized, likely by smaller initial raises. Canadian companies have plenty of money and are apparently shaping how the U.S. cannabis sector looks. Not all of these companies are cannabis companies. There's a British-based Village Farms that's a producer of hydroponically grown greenhouse tomatoes, bell peppers, and cucumbers. They shifted into cannabis just to diversify, probably a money grab. Not always a bad thing though. It's the company's first move into the cannabis space with a joint venture for a medical marijuana research company called Emerald Farms. The joint venture will be called Pure Sun Farms and has already converted 1.1 million square feet of greenhouse space in British Columbia. Recently, it was selected to supply Ontario Cannabis Store with products of the non-medical market. There are plans to convert the Texas greenhouse to hemp production if Texas legalizes hemp. So the company issued a press release back in December stating that it intended to aggressively pursue hemp and CBD opportunities in the U.S., but until Texas legalizes hemp, there can be no immediate plans in place to do so. So they did get the impression that the prep work would continue to be done prior to legalization, and has already been done in the conversions of the massive 5.7 million square foot facility could be done within 6 to 8 months of that legalization approval. So this is just one more incidence of a Canadian company who has access to capital coming back down in the U.S. using CBD as that legal opportunity to set up their entire operations and all of their assets, property, plant, equipment from the Canadian financial marketplace back to the U.S., creating infrastructure so that in the eventuality that legalization happens and banking opens up, they'll have all of their facilities and everything in place to convert that to THC and just start running when everybody's applying for a bank account. The international adult use market is attracting cannabis money. The Viridian Capital Advisors provided the latest data on cannabis investment activity for mergers and acquisitions, along with key takeaways, analysis, and trends based on recent market moves. Some of the top takeaways from this week's capital raises include international hemp cultivation and product development operations continuing to lure newer investments. This can be seen in Toronto-based Canopy Rivers. They completed a $9.4 million Canadian dollar equity investment in Cannapar Corp, an Italy-based organic hemp production and processing platform. Colombia-based Blueberries Cannabis completed a private placement worth $8.8 million as part of a public listing on the Canadian Securities Exchange. The deal underscores the continued interest in Colombian operators that are developing low-cost supply for international trade. So it looks like it's still the weekly capital raises are lower in frequency but higher in dollar amount, and yet the transactions are still increasing, so I'm not even sure that that's valid. So it looks like the M&A transactions by week are increasing. I would assume that the dollar amounts per transaction are also increasing, so those are all good plays. Some other top takeaways from the M&A scene is a land grab continued among U.S.-based multi-state operators, or MSOs. U.S.-based adult use operators, including producers and retailers, continue to be the top acquisition target, with nearly half a dozen deals logged just last week. Among them, you have a Vancouver-based C21 Investments. They closed this acquisition of Oregon-based cannabis producer Phantom Farms. Denver-based LiveWell and Lighten Health closed on an acquisition of Fort Collins-based Green Meadows Wellness. And Chicago-based Verano Holdings finalized its acquisition of $4 Compassionate Care, a Massachusetts-based cultivator, producer, and retailer. Canadian stocks are still risky, as we can see with Canadian company Ascent Industries. They had their license revoked from Health Canada for a number of reasons. What I've heard is that there was some cannabis that was left out, ready to be sold to a non-registered dispensary, and they already had vape pens and oil being sold to non-registered dispensaries or medical shops. And oil isn't legal, neither are edibles. So they received that slap on the wrist and a warning, and then 6 to 9 months later, Health Canada came back and it was still happening. So Ascent Industry could lose their license as a result. They also have entities in Oregon called Sweet Leaf, as well as in Nevada. Nevada might lose their license too, because they were found doing the same thing. They had bad records, unauthorized industry consumption parties, and the Nevada regulatory authorities took into account what's happening with their parent company in Canada. So it's just a compounding issue for them. The article goes on to say that Ascent Industries' subsidiary Agroma Botanical failed to demonstrate to federal authorities that a suspension of its cannabis license in Canada is unfounded, putting future operations further in doubt. I already know companies that are going to be trying to piecemeal this thing and buy what they want, the production or the Oregon facility or the Nevada. And so everything is going to go to the wayside, which is really unfortunate. Because when I visited the facility December of 2017, I was really impressed. I thought we were going to be able to move forward automating joints and blunts and working on an international market. They had 4 years invested in a lot of these entities, and then just to sell oil just a year in advance, they should have waited, should have continued their R&D. So it's really crazy, actually. It's surprising that somebody would be so risky when their friends and family funded the initial round. You know, there's a lot that goes on with the business, but they screwed over a lot of investors. So this is going to be really interesting how it plays out. Cannabis companies receiving capital has almost become commonplace, while trademarks and bankruptcies and patents are kind of that new buzz.
And with that, we're going to roll this one up. This is Talking Hedge. I'm Josh Kincaid, and I'm out.